Update. I'm Ryan Donovan, CUNA's Chief Advocacy Officer. It's September 8th, 2020. Here are 3 things you need to know about credit union advocacy this week. Congress is back for 3 weeks of session before the end of the fiscal year. FHFA responds to CUNA and the League's concerns regarding the proposed adverse market fee. And NCUA's comment period on flood insurance has been delayed until November. Congress is back for 3 weeks of session before the end of the fiscal year. 2 major questions hang over the legislative branch. Can they come together to enact a new round of COVID-19 recovery legislation? And will they be able to secure an agreement to fund the government through the election? While these 2 questions have been distinct for most of the summer, there's a good chance they'll come together in September. Remember what I always say, Congress works its best in crisis and under deadline, and those dynamics are certainly in play here. Another dynamic that will influence what happens in September, of course, is the election. There are a number of members of Congress, particularly senators, who face challenging re-election prospects. They're going to want, frankly, they're going to need Congress to enact something related to the virus and keep the government running. We, of course, remain engaged as Congress works these things out. Our top priorities for COVID recovery legislation remain the same. We want Congress to extend the CARES Act credit union provisions, including the troubled debt restructuring accommodation and the expanded central liquidity facility authorities. We've sent language to the Hill that would provide more flexibility for prompt corrective action during this time. We'd like for Congress to make it easier to forgive Paycheck Protection Program loans. We hope that any COVID recovery legislation that's enacted would include liability protection for businesses like credit unions that need to remain open during this time, as well as state and local funding for first responders, schools, and other essential facilities. On the appropriations side, we continue to support additional funding for the Community Development Financial Institution Fund and the Community Development Revolving Loan Fund, as well as the Cooperative Development Program. You may recall that in August, Fannie Mae and Freddie Mac announced a new adverse market fee of 50 basis points on refinanced mortgages beginning September 1st. This fee would have raised costs for families trying to make ends meet in these challenging times, and it would have conflicted with the administration's recent executive actions urging federal agencies to take all measures within their authority to support struggling homeowners. Most concerning, the fee was set to be imposed on September 1st, which would have meant it would have impacted refis that had already been locked in. Well, I'm talking about all of this in the past tense, and that's because the good news is that FHFA responded to opposition by CUNA, the leagues, and other financial trades, as well as consumer groups, Congress, and the White House. They delayed the fee until December 1st, which solves the issue with the locked-in refis. And they exempted loans under $150,000 from the fee, which addresses the impact on low and moderate income borrowers. We appreciate FHFA's change of course here, and we thank all of the credit unions and leagues that weighed in on this matter. NCUA and other federal financial regulators extended the deadline for comments on the interagency question and answers regarding flood insurance. There were a number of significant topics that are addressed by the proposed revisions to the Q&As, and they include the impact that major amendments to flood insurance laws with regard to the escrow of flood insurance premiums, the detached structure exemption, and the forced place procedures would have on regulated entities and borrowers. The new comment deadline is November 3rd. CUNA was the first organization to request this delay. We filed a letter in July asking NCUA to allow sufficient time for credit unions and other stakeholders to thoroughly analyze and digest the proposed Q&As. The delay became even more urgent in August when hurricanes ravaged Louisiana and Texas, disrupting many of the credit unions that would have been impacted by changes to the Q&A. We appreciate NCUA and the other regulators giving credit unions and other stakeholders more time to comment on this proposal. That's it for this week. Thanks for taking time to join me for the advocacy update. I hope you found this helpful. Please don't hesitate to reach out to me if you have any questions or concerns.